In this video, I'll be showing you the candlestick pattern I use to find high probability entry points from day-to-day basis. Candlestick tells us the sentiment of the market. It enables us to figure out where the market is headed next. Mind you, we have three kinds of charts that traders use to analyze the market. Such chart includes the line chart, the bar chart, and the candlestick chart. But I personally prefer the candlestick chart. So in this example, I'm going to be using the daily candlestick chart. Although what I'll be discussing with you will work perfectly well on any time frame. But I would prefer to use the daily candlestick chart to analyze and show you exactly what I mean. But I can assure you it will work perfectly well on any time frame. Alright. Hello traders. This is the two candlestick that we have. We have the bullish candlestick and it is indicated by the color green, and we have the bearish candlestick and it is indicated by the color red. Let's go back to the bullish candle because that is where we are going to start today. Let's say it opens here at the open and then it moves to the close. Then on the other side of the bearish candle, it opens high and then closes low. On the bullish side, it opens low and closes high. So on a given day, it will open here at the open, at the low, and then closes high. Let me make it clearer by making some markings on it. So let's assume it opens here at the lowest part, and let's say we call it $5. Let's say it opens at $5, and then it begins to move up and move all the way to the close. So we call that the close of the day. You can see, let's say it is $10. Then from that open, it moves all the way. It moves from the $5 where it opened. It went down to the lowest point. Let's call it $3. From there, it recovers back to the $5 and begins to move all the way up and closes at $10. So let's say it closed at $10. But before then, it moved all the way to the highest point. Let's say $15. It was able to move to $15 before falling back to $10. So we call this $3 the low of the day, and we call the $15 the high of the day. So that is the highest point it went, and 3 becomes the lowest point that it went. So the $5 is the open, and then $10 is the close. So it moved from $5 to $10 and then closing at $10. So but what happened is that it went up beyond the $10 to $15, then fall back to $10. So you need to get it clearer. From $5 where it opened, it fall to $3, that making the lowest point for that day before it begins to recover and went back to the $5. That's the open, and then thereabout it begins to recover and go up. Then from there it move all the way up and then reach the point of its close, that is the $10. You need to understand what actually happened. What happened is that at that $10 it was able to move up, then before falling to $10. Now let's see the red candle. Exactly the same explanation is what we have here. It opened here high, and this is the marking. So let's say this is the point where it opened, then from there it moved up to a certain point, and we can give numbers to it if you want. Let's say we give it $20. So it opened and moved higher from its open to $20, then fall back. So upon falling back, it went all the way down to the close, and we can give a number to the close. And let's say we give it $10. That should be okay. Let's give it $10. From that $10, it begins to move, continued its movement and went down to the lowest point it fall for that day. Let's say we give it $8. So from that $8, it made a bit of recovery, and then closing at $10 before. So let me recap again. Let's say it opened at $15. Let's give the open $15. So I know this is a bearish candle. When it opened there at $15, it was able to move up to $20 before falling down and then coming to its close, where it closed at $10. But remember, before it closed, it went all the way down to $8. So I want you to begin to notice the difference, so that anytime, any day, you should be able to explain these key factors. So you note the open of the day, the close of the day, the lowest point it went, then from the lowest point, then it recovers itself and go up again. So one thing you need to understand is the distance it moved from the open then down to the close, and then it went to as low as $8. So I want to take note of this particular the week here, because that is a very important aspect you need to know. You need to know that the upper wick is the upside where it has nobody. So, and the lower wick is the point down where it has nobody. So the close of the day is $10 and the opening of the day is $15. Therefore, it means that a bearish candle is denoted by opening high and then closing low. So, but when it opened at 15, it went up the way to the upside, then came down, and then when it closed, before it closed at $10, remember it went beyond that $10 to $8. So you should be able to know. Let me emphasize one thing now. From the distance from high to low is what we call the range of the candle. That's what we call the range of the candle. The distance from high to low is the range of the candle, or the candle's range, while the distance from the open to the close is what we call the body of the candle. Take note of the difference so that you will not misplace it. From open to low is the body of the candle. So you see the body is separate from the wick, but when you consider the wick, the upper wick or the high, the highest point, it went that $20 to $8. So the high to the lowest is what we call the body's range. The same thing if you were to consider the bullish candle, the same thing goes for both of them. The same explanation. From the open to close is the body of the candle. From $5 to $10 is the body of the candle, while from the low to high is what we call the range of the candle. So if you are able to understand this key difference, then it means that you will actually know the structure of the candlestick, and understanding the candlestick body and structure is exactly the starting point of mastering the candlestick. Alright, so it is important you understand how to trade with the candlestick, and the starting point in knowing how to trade efficiently with the candlestick is to understand the structure done the anatomy and the ins and out of the candlestick. So you know the DNA and the anatomy, the physiology of the candlestick. That is where you should be able to know how to trade with candlestick. So whenever they are talking about the high of the day, the low of the day, the open or the close of the day, you should not be confused. So if you stay tuned with me on this video, at the end of it, you should be able to know everything you need to know about the candlestick and how to trade efficiently with candlestick and make your money anytime, any day. All right. When you are on a chart, you will discover that not all the candles look exactly like this. Some are short, while some are longer, depending on the sentiment of the day. Now I will be going ahead to show you some of the specific candlestick patterns that changed the game for me. These candlestick patterns are so powerful that if you really understand them, you will automatically move from an average trader to a more sophisticated trader. Now I'll be going ahead to show you these candlesticks that actually change the way I trade. Alright. The next candlestick pattern I'm going to show you is what I call the bullish pin bar. This is the picture as you can see it on the left side of the screen. It has a small body and a long tail. Alright. And that's what I call the bullish pin bar. It is a very powerful candlestick pattern that you can trade anytime, any day. Anytime you see this candlestick, just know that the market is about to turn. I'll be showing you now the characteristics of this candlestick pattern. It has a very strong body ranging from here to here, just very small body. Here you see the opening price on this particular day. The market opened exactly at this point. So it opened here, and as it opened, what happened is that it begins to go down. It went all the way down to this point, and it has a very long wick. You can see the long wick, and it is labeled very appropriate for you so that you can understand it. So what happened is that after going down, at the time the candle has a red body, as you can see from the picture. It went all the way down to this point, and from then it got weak and began to erase, began to pull back until it get back to the opening price again. So that shows you that at the time the BS were very strong, and all of a sudden they begin to lose strength, and they got back to the opening price, and at the end they moved up and closed higher. That shows that at the time the BS were in control of the market, but they could not hold their game. So within the time period, the bulls took control and pulled the market up, and I was able to close higher. So that shows, what does that mean? That connotes that the BS have lost control of the market. It shows that a reversal is already setting its place, and when you see this candle, you should know that the market is about to turn. So take note of this bullish pin bar. So I will recap exactly what I've said. Whenever you see this candle, know that the candle is a very powerful bullish reversal pattern. They have a very strong tendency to turn the market. So whenever it appears, just take note where it appears. If it appears at the right location, such as a support level, know that it is your game to play. Get ready to buy. And if it appears on top of a moving average, just know that it is exactly calling you up to place a buy. So whenever you are using a moving average and you discover that there has appeared a bullish pin bar, and this bullish pin bar is at the support level and the moving averages are under it, for example, if you are using a 50 moving average, 100 moving average, or 200 moving average, and this candlestick pattern you are looking at now, the bullish pin bar, appears on top of those moving averages, it doesn't matter the color, whether the body is red, whether the color of this body it is green. What matters is that it has a long tail and it has a small body. That is just what I want you to take note. And whenever you see it that way, it is a trade that you can take anytime, any day, and the success rate is above 95%. It works majority of the time whenever it appears at the right location and at the right time. So just know that at the time, why it is so powerful is that at the time, the bears were actually in control of the market as they push this candle all the way down. But the recovery of this candle to close as a bullish pin bar and have a small body shows that something great has happened in the market. Perhaps the big players have all come into the market and they are on the bullish side. So that will automatically alter the game to the side of the bulls. So as a retail trader, what you need to do is to position yourself to align with the big players, because that is where the money are. You know what it takes for the bulls to resist this going down with this candle, and they recovered with this candle. That shows you that the bulls are actually totally in control, and there is nothing you can do than to join the winning team. So whenever you see this candle, position yourself for a buy. Now I want us to see an example of a bullish pin bar in a chart. You can see it in this chart. Look at this chart very well. You can see that at a point, this chart begins to go down and go down and go down, and it got to this point, and suddenly it appears a bullish pin bar, very small body, small red body, and it begins to go down. It went all the way down, and before you know what was happening, the color begins to erase and pull back, pulling up, and then it closed as a small body and closed higher than it went. So what that actually means is that at the time the bears were very strong, as they were able to be pulling the price down up to this point, and all of a sudden there was a recovery and a reversal, and this candlestick, the last candlestick, ended as a bullish pin bar. And when this candle ended as a bullish pin bar, what will come to your mind is that something significant has happened, and this price is about to begin to go up. As an intelligent trader, what you are supposed to do is to quickly position yourself in order to trade to the upside. As soon as the next candle appear and begin to turn positive, turn bullish, you should not hesitate. As it began to trade above the body of the bullish pin bar, what you should immediately do is to place a trade there, and this trade would have been a resounding success as it went all the way down, so many candles to the upside. It would have ended as a massive gain for you. So there is no underestimating the amount you could have made on this trade. But though the amount you're going to make would depend on the lot size and the size of the account. So someone could have made $1,000 on this trade. Another one could have made $5,000. Another person could have made $10,000. So the amount you make doesn't matter. What is important is that for you to understand that it is an opportunity that is worth taking. So if you are using any form of indicators, your indicators also will be pointing to you that something is about to happen. If you are using something like stochastic, the stochastic will be showing you that it is actually oversold. And when your stochastic is showing that it is oversold, you should know that it is time to begin to place a buy. If you are using moving average, at least 2 moving average, you will notice a crossover of the moving average towards the upside, and that would also signify to you that it is time for you to begin to buy. So if you are using about 3 moving average, what happen is that at least 2 or all of the 3 moving averages will go under this pin bar and be under the pin bar. So that will show you that you should immediately place a buy. This is another example I'm going to show you here. As you can see, also at the bottom of this chart, there was also a bullish pin bar. So take note of it. This candle was moving, going up and down, but overall trend going down. So at the point came when it went all the way down, very down. So with this exhaustion candle, so this candle at the time was totally red, and it went all the way down, and then it recovers and was able to close as a bullish pin bar with a small body. So that should show you that the BS has run out of steam and they are no more able to pull the prices down. Therefore, you should be able to position yourself for a buy. That shows you that the big players, the hedge funds, the money managers, the banks, they must have come into the market and they are able to cause a reversal of the trend. So you as a small trader or retail trader should be able to position yourself now in order to align with these players. When you notice that the price was no more able to break below this level of support, you should know that definitely there is no way. The only trade available now is to place the trade. Assuming you did not enter on the pin bar, then when you notice this bullish engulfing candle, we call it bullish engulfing candle. When you notice that candle, oh no, there's no going back. You should have immediately placed a trade, especially on the appearance of that engulfing candle, trading above the red candle at the side of at the appearance of the bullish engulfing, that long bullish candle. You should be able to have placed a long trade there, and the rest could have been history, as you could have made a massive gain to the upside. So never you be dismayed or discouraged. Never you allow fear to stop you from, placing a trade that you know that you are going to make mammoth profit simply because you are afraid. Now the next candlestick I want to show you is the bearish pin bar, otherwise known as the topping tail bar. This is the opposite of the bullish pin bar, and look at it on the right hand side with red body, long tail and very short body. You can see there where labeled. The long tail there is the long wick, and you have the body, see the opening and the closing. Now when you notice this, you will know that the next move is going to be towards the downside. It is very fertile when you notice it on areas of resistance. When you notice this pin bar, the areas of an uptrend, then not just know that it's about to reverse. So this move is very, very effective whenever the overall trend is a downtrend and there is a movement towards the upside, and that movement is punctuated by this pin bar. So look at exactly what happened. It opened, and from the opening side the bulls pull it all the way up, and at the time they begin to lose strength. They could not hold their ground, and eventually it fell back and then ended here at the opening, and from that opening it moves and closed at the closing price. That shows you that the bulls have lost strength and the bears have taken control of the market. All right, that shows you that the next move automatically is going to be downwards. So if you look at it, you will notice that this pin bar has a very long tail, and that long tail is called long wick or long shadow, and it has a very small body. and this body is very small compared to the long wick. This is the opening of the day, and then from that opening it moved all the way up and then begin to lose strength, and it came back again to the opening and moved downwards and closed here at the closing price. So that will tell you exactly that the bulls have lost control. They are not able to control the market. They have lost their steam, and the bears are the ones in control and dominating the market. That shows you that the move is going to be downwards, and there is no two ways about it. So, and this is this bearish member, and this bearish member is very powerful candlestick pattern to pre-warn you that the next move is going to be downwards. And at this stage, you should be getting ready to go short at the appearance of this candle. So this is a very powerful candlestick pattern to trade the down move. So whenever you see it, do not be afraid, do not entertain any fear, just begin to get ready to place your trade to the downward side. And if you do that, definitely it's going to work out for you. So that is what I think. So it's a very powerful candlestick pattern to indicate that downward movement is on the offer. Now let's look at practical examples. This is a chart here. Let me make the chart a bit bigger, small. So what is happening here is that I have about 3 moving averages here, and with a very pin bar, small pin bar forming towards the top. Let me emphasize it now. So this is the area the pin bar has formed. As you can see it, I've circled it. It has a small body there with a long tail that is touching the 200 moving average. So when you notice this type of pin bar being directed by the moving average and also covering at a resistant area, this is the resistant area here. So what you notice that this pin bar has formed, and it coincides with a resistant area, and it is on top of the moving average. Then you notice, you should know that the next move actually definitely is going to be movement to the downwards. So you can see the pin bar clearly. Immediately it forms. There was no two ways about it. The move began to take place, and it was towards the downside, as we have already explained. So whenever you notice this pin bar appear around a resistant area and around a moving average, it could be a moving average crossover. So what happened is that from that moment, there is a high indication that the movement will continue to the downside. So it's a very powerful reversal candle anytime you see them. So let's assume that you miss this first trade. Look at it. There's another pin bar that forms here, this area. So you could have immediately traded that one. So as when you miss the first one, once you notice a movement has now gone down, and then try to move up again, and become intercepted by the crossover of the moving average, and then at the formation of the pin bar at that area, that is your trade to take. You do not need to entertain any fear at that moment. What you simply would have done is to get ready and pump in your long side there, place a short trade, and immediately you place that trade. Immediately you place that short trade, you will know that from that moment it was gain all the way. It did not even attempt to move up again at all. It began to move down immediately, and from then it has been movement all the way to the downside. Imagine the kind of gain you would have made if you have placed your trade there at the formation of that timber. So notice the intersection or the crossovers of the moving average there. From there is also another indication that the movement is all the way to the downside. And look at it here. Since that day, it has been movement towards the downside. And look at the final point it culminated. Assuming you take the first trade without fear and had patience, you could have made a very massive gain from the moment of the formation of that first pin bar or the second pin bar. In fact, pin bar as it is one of my favorite trades. Anytime I see them, I get ready to pump in my trades, especially the short trades. It is time to sell anytime you see them. It is a sign that the market is about to turn and the bears are ready, to gain upper hand in the market. So anytime you see them, just be confident. In trading, confidence is the key. So never you be afraid. Now this is another example here. You can see, I want you to look carefully and see whether you'll be able to identify any pin bar. All right. So look at the second pin bar that has formed. Where is it forming? Remember what I told you before? Look at it here. It has formed. It has a green body, but the body doesn't matter. I have told you that the color can be red, the color can be green. It doesn't matter. What matters is that it is a pin bar. So this is a bearish pin bar. Very beautiful, that one for that matter. So at this point, there is a crossover of the moving average, and it coincided with this resistance. So check out this resistance area, very powerful resistance, and that is where the pin bar formed. And since the formation of the pin bar, it has been all the way movement to the downside. All right. So just notice the formation of this pin bar. Anytime you notice them, is always a beautiful trade to take anytime, any day. So what happened is that the pin bar formed. There was an attempt for the pin bar, for the bulls to pull the market all the way to the upside, but on touching that resistance, they quickly lost strength, and that was what led to the formation of the pin bar. So whenever you see this pin bar forming in this pattern, then forming at areas of a moving average, look at the moving average serving as a support occurring at the resistance area. So just know that it is time for you to go short, and this time you need to go short heavily owing to the appearance of this beautiful pin bar at the point of the next candlestick trading below the pin bar. You could have immediately pumped in your short trade, and the rest could have been history for you. Look at it. After the formation of the pin bar, it attempted to move up, only to be pushed down again by the strength of the reversal. So look at where you could have placed your stop loss at the top of that pin bar. Just above that pin bar, you could have placed your stop there, and from the moment you place your stop, the prices never attempted to reach your stop again since that time. So what that shows is that this pin bar, whenever it forms, is a very strong candle. Look at another example again. The pin bar is so powerful that anytime you see them, just know that a turn is about to take place. Look at it here. I hope you can see it clearly from the formation of that pin bar. Let me expand from so that you can see it properly. At the formation of that pin bar, it shows you that there is nothing you can do. Only sell is the thing. And when you look at the left, you know that this pin bar also corresponded with a previous resistance. So when you look at the history, there is a resistance at that same point where the formation of pin bar has taken place. So from that point, just notice at the time where the second candle, the red candle now, will be trading below the pin bar. At the point it begins to break below the pin bar to the downside, just know that actually the reversal is real. And once you do that, you should be able to place a trade there, short trade without fear. So place your sell trade there, and then the rest will be history for you. Look at the other second pin bar that formed after the red candle moved down, and then at then retested itself, trying to move up. Then a second pin bar with a very small body also fall. So you see the blue candles, these two short blue candles, they formed there, and they were not able to move up at all. So it's just a minor attempt to go to the upside. So there is no, your stop loss could have been placed at the up there, and then you notice that at all the movement, at all the punctuation, there was never a time the prices attempted to reach your stop loss at all. So you could have been in the trade confidently, and the movement up and down, you don't need to be a fear of them, since your stop loss is intact. There is no need to fear. What you could have been doing is to be taking your profit bit by bit, then allowing the rest to continue to run, and then you could have made thousands and thousands of profit on this trade, depending on your lot size. All right, so pin bar is a powerful reversal pattern to trade, to place your trade for a sell, and to place your trade towards the downside. And then when you do that, you notice your game begin to swell in every day and night until you master your game. The next candlestick pattern we are going to look at is the Tweezer button. It suggests that it occurs at a bottom. The name itself suggests that it occurs at a bottom. When you notice a series of candles was going down and down, and all of a sudden there appears a Tweezer button. What this means is that there is a turn, and the movement is about to go up. So the appearance of a Tweezer bottom at the support level of any move shows that there's a turn, and the movement is about to take place towards the upside. Therefore, you notice a Tweezer button. The appearance of a Tweezer button is a game changer, suggesting that you should play with the bulls. So let me repeat now and again. You see an identical bearish and bullish candle occurring at the same time. It means that it is time for you to begin to adjust yourself and begin to place a trade towards the upside. So here you can see that there's a bearish candle, a red candle. Let's assume that all the candles were all red, and all of a sudden there is an appearance of a bullish candle of equal length and magnitude. What it will immediately indicate is that a turn is about to take place in the market, and it is time for you to begin to place your trade and position yourself for an up move. So this normally indicates a big comeback by the bulls. So this is a very powerful bullish reversal, and what I can tell you is that the appearance of a Tweezer button is a powerful bullish reversal that can usher you into a bullish setup. So this bullish setup is worth taking anytime, any day. Now and again, I must repeat that it has to appear at the right place and at the right location, such as a moving average support or a previous support. So whenever you see it in that pattern, it shows that this trade is an indication of a reversal, and it's a trade worth taking. And then when you see this red candle being overtaken by a bullish candle of equal length and stature, then it is a reversal pattern that is indicative of the bulls comeback in the market. So it is worth taking. So whenever you see this, know that you are ready to join the bulls, and the winning team at that point in time is going to be the bulls. So notice it in the market. It is buy, and buy, and no more sell. So the market is a buying market at that time. All right. Again, let's ask ourselves a question: why does this setup work? There is a reason why this setup works, especially all the time. Now let me ask you, let's examine the psychology behind this trade. Let's assume that this candle opens here and then move all the way down and close here. So, and the second candle opens and close up. Let me emphasize exactly what I mean with my pen. For example, here, let's say that it opens here. Let's say it opens here and then move all the way to the downside and closes here, as you can see. So let's assume that it closes here. Are you seeing it? And the second candle is identical, and then it opens here, as you can see, and then move all the way to the up and closes here at the up. What does it mean to you? It means that it is equal to this. This is what it translates to. Let's see it here. So look at it here. This is what it translates to. And what is this? This is a very bullish candle, and it's called a bullish timber. All right. So again, I said, let's assume the candle opens here and then move all the way downwards and closes here. And the second candle, this second candle immediately reverses it by opening here and move all the way up and closing here. So what does it mean? It means that all the effort put in by the bears have been reversed by the action of the bulls. So especially what you summarize there is that here is empty. All the effort made by the bears has been wiped out by the bulls, and then by the movement all the way up, closing at the up. So while this candle ends here, this one opens and ends here. So what does it mean? When you combine the two candles together, what you have is a bullish timber. So a very bullish timber, very bullish in nature. This is what you have. So what does it mean? Definitely what it means that the whole of this, nothing has actually happened. No work has been done by the bears. The bears attempted to move down and then they were not able to do so. So at the end it ended this way. You may not be seeing this physically, but that is exactly what is represented here. Let's assume that all the candles are opening and closing in the same place, opening and closing in the same place where they have opened. What does that signify? What does that mean to you? It means that the bears are actually running out of steam. They are not able to trade above where they have opened. They are simply opening and closing in the same place that they have opened. Psychologically, they have not done anything. So they are simply running out of steam. There is no work done. Just opening in the same place and closing in the same place. It actually indicates to you that an up move is on the offing. So at this point in time, you should be ready to trade the move all the way to the upside, and then assure yourself that a reversal has taken place, and that is actually a bullish reversal. All right. Now let me show you the various ways and various patterns that a tweezer button can appear, so that when you see it on a chart, you will be able to notice it, you'll be able to understand it. So let me widen this chart so that you can see it. This is Tweezer button. You can see it looking more like a bottom interbar or a bullish pin bar. So both of them are equal. When you look at the body, the two bodies, they are equal, almost the same thing. You can use the body to actually pinpoint it. When you look at the shadow, they are of equal length and size, and the bodies are of equal length and size. So when it appears like this at the bottom, it is a tweezer button, and the body is of equal length and size, both up and down. You should know that this is a tweezer button, and it shouldn't be hard for you to identify. Let's look at the second one. Let's look at this chart again. Let me bring it closer so that you can see it. This is another tweezer button. Look at the appearance of this one. You see the candles here. We are moving down all the way from up, going down and down and down, and all of a sudden there's a long red candle that appears, and the red candle is immediately challenged by another green candle, a bullish candle of equal length and size. So that shows you that something is happening in the market and something big has happened, and then the bulls are seen to have regained their strength and are able to challenge the bears. So this could be the first thing that will signify to you that a turn has taken place, and this place is likely to be the bottom, and that could be the support level. Assuming you have applied a moving average, the moving average is going to be somewhere under this price. It's going to be somewhere under this chart, and then followed by this tweezer button. It will show you that exactly there's a turn that has taken place here. And when you look towards your left, you could discover that the area have served as a support level before. And then the appearance of this tweezer button will show you that a turning has taken place, and we are about to experience a movement towards the upside. If you are using an indicator such as a stochastic or an RSI, it's going to show you that the chart is oversold at that point. And when a chart is oversold, what happens is that it is time for us to place a trade towards the upside. It's a time that will notice, that will recognize that there has been a reversal, and it's time for us to begin to place our trade and then join the movement of the bulls. So the appearance of a tweezer button and the support area indicates that there's a reversal taking place and a best move, and the next move is likely to be an up move. Now let me show you another way you can use to identify it. I want to make sure that whenever you see this tweezer button, you will be able to identify it. You see these two pin bars, they are of equal length and of equal size, and you see this at the right hand side, when you see these two candles, they are of equal length and size. Whenever you see it this way, just know that what you are looking at is a tweezer button. Two candles, opposite candles of equal length and of equal size occurring at the bottom is called a tweezer button, or occurring at the support level, then it is a tweezer button. When you become so good at recognizing it, your trade will definitely improve tremendously. Now let's continue to look at them so that you will easily identify them anytime, any day. Look at this one. Let me bring it closer. Look at it very well. Look at the body here, the small body. Look at the green body, but it's the same thing with the red body. And look at it very well. It looks like a bottoming tail bar followed by another bottoming tail bar. Look at it, both of them are equal in length and size. So this is exactly a tweezer button. When you see them like this, as equal length, equal size, opposite to each other, it's just a tweezer button, and it's indicative of the fact that a reversal has taken place, a bullish reversal, and the candles are ready to move to the upside. So you begin to notice a series of candles now moving towards the upside. So this setup is very powerful to trade an up move. Let's continue. Let's look at this one. This is actually another tweezer button, very beautiful one indeed. Look at the candle was moving all the way towards the downside from the up, moving up and down, and then all of a sudden there's an appearance of a tweezer button. So there's appearance of a tweezer bottom here. So tweezer button is just two equal candle of equal length and size, one being a bearish candle and one being a bullish candle. So the last bearish candle is overtaken by a bullish candle, and the candles are actually of equal length and size. That will show you that it's a tweezer button. and it's a very powerful bullish reversal candle. Wherever you see it and whenever you see it, it is time to buy. It is time to go long on a trade. Anywhere it appears, just know that it is time to begin to buy. Just watch the two candles that is called the Tweezer button. At the appearance of the Tweezer button, once there's another candle forms, begin to trade above this Tweezer button, you immediately should go long, and then the rest will be history for you. So someone could have made $1 million depending on the size of the lot size. So assuming you notice a downtrend and at the time a Tweezer button appears, immediately place your buy trade and place your stop loss under the setup, and then the rest is history. You begin to see your trade move towards the upside, and each candle move to the upside, it is your money that is moving up. It's a powerful trade setup anytime, any day, and it is among my favorite setup to catch a powerful move to the upside. So Tweezer button, you can use it to enter the market anytime, any day, and make your gain. And as soon as you take your profit and you are satisfied, then you should be ready to come out, or you wait for another one to form. So anytime you are in the market and you see any of these patterns that I've been showing you, make sure you trade it, and as you begin to trade and master it, you become a better trader, and you should be able to thank me for it, because if you stay in this channel, my work is to ensure that I show you all the secrets of the market so that you begin to trade like the banks. So those you consider are gurus, they are just gurus because they are able to identify some of these patterns and are able to trade them consistently. And as you trade more consistently, you become a better trader. All right. The next candlestick pattern we are going to discuss is the Tweezer top. Tweezer top is the opposite of the Tweezer button, and it is an indication that there's going to be a massive movement to the downward side. So when you notice it, just know that a downward movement is loading, a massive downward movement for that matter. So Tweezer top is a bullish candle followed by another bearish candle of equal length and size. When you see it at a resistant area, just know that downward movement is about to take place. And when you notice this pattern at a resistant area, just get ready. Get ready. You should be salivating, knowing that your gain is about to take place. All right. Let's assume that a series of candles were going up, and all of a sudden you see this setup. So this setup will help you understand that it is time for you to place your trade towards the downside. All right. So let me show you the psychology, behind this trade setup, so that you'll be able to know it anytime, any day. Let's assume a candle open here and close here, and the next candle open here and then close here, downward here. So these two candles are equal length and size. Just know that you are dealing with a Tweezer top, and naturally what you are expected to see is a follow-up of the movement downwards. All right. So the next candle definitely is going to be a red candle, and the next candle is going to be a red candle, and all the way the movement will continue to the downside. So let's say the candles are opening and closing at the same place. What does that mean to you? It means that the bulls have run out of steam and they can no more move up. Definitely the next move that is expected to be seen should be a downward movement. Let's say the candles are expected to be moving upwards, but all of a sudden the appearance of a Tweezer top punctuated it, and then that shows you that the next move definitely is going to be towards the downward side. All right. That is how to identify a Tweezer top. So whenever you see it in this way, when you see it this way and it occurs at a resistant area, it is a powerful setup for you to trade to the downward. It's a powerful setup for you to go short. If you become proficient in identifying it, your trade is definitely going to improve. When you become so good at identifying all of this setup that I'm showing you, definitely you should be a better trader. All right, so follow me and get used to these setups, and then your trade will definitely improve, as I have made known to you before. So when you see this on a real chart, real chart, if you are using a moving average, you begin to see the movement of your moving average crossing over, and it's going to serve as another confirmation for you. Your moving average now is likely to be at the top of this setup. So a tweezer top is known or made known by two candles of equal length aside. For example, like this first one now, it opened here with a shadow. It opened here with each, and then the shadow move up, and the two shadows are of the same size, and the bodies are of the same. But irrespective of whether it has the shadow or not, the body enough is the body having equal length and size is enough for you to know that it is a tweezer top, and then a movement to the downward side is expected. So, but from what we can see from this setup that you are looking at now, it is two bearish pin bar with two shadows. So both of them has a long wick, two of them like this. Let's see another example so that I want you to be able to identify tweezer top wherever you see them. Like this one now is different from the first one we saw. This one has equal body. There's not much wick, just only small wick. So initially the candles was moving towards the upside. The candles were moving to the up. All of a sudden, there's an appearance of a tweezer top. So whenever this tweezer top appears, it should alert you that is the climax of the move, and a turn is about to take place. A reversal is about to take place. So I want you to notice this tweezer top. Let me emphasize it more and more. The first candle that make up this setup is a green candle. It moved from the bottom up and close up. Then the next candle moved from up to down. So it shows that there is no work done. The effort of the bulls is being thwarted by the effort of the bears, showing that the candle actually is opening and closing in the same place. So this one now shows that the bulls have run out of steam by the appearance of the tweezer top. So if that occurs, what you naturally expected is a movement to the downside. So that is exactly what happened in this case. So let's assume you have placed a trade or a short trade. Let's assume you have placed a short trade here. Assuming you have sold here, what happened is that boom, you'll be in massive gain. All right. Let's continue to look at other example. Okay, look at this one now. I want to make sure that you'll be able to identify a tweezer top wherever it occurs. Look at this one now, corresponding with a previous resistance at the left hand side. So this is a very strong tweezer top. That the beginning of this move is a bullish candle that is moderately reversed by a bearish pin bar. So whenever you see this setup like this, it means that institutions are involved. The institutions are back in the market, and this institution is maybe banks, maybe hedge funds or money managers. So this will indicate to you the directions that they are trading at the moment. So the appearance of this tweezer top will show you that it is time to go short. It's time to go downwards. So let's say the candles were moving all the way to upside. All of a sudden, a bearish candle of equal length and size, the same magnitude appears. So it means that it's a 180-degree reversal. And naturally, what you are going to begin to see is the other formation of the candles will begin to drift downwards, and exactly what happened in this case. So take note of this setup anytime, any day. So you should have placed a stop loss at the top, anywhere around the top, and then place your trade at the appearance of this tweezer top. So many people believe that you don't need to use a stop loss. So that will be a lesson for another day. I don't want to go into that now. But there are proponents to the notion that you don't need to place a stop loss, and there are people in support of the fact that you need to use a stop loss. But to me personally, there are situations under where you should use a stop loss, and there are some other situations where you may not even need to use any stop loss. So, example, if you are present on your system and you are right there, so of course, if you don't want to use a stop loss, that will be fine. What we do in this case, you simply place your trade and then be there on your chart and watch. If the next candle opens here and continues to go down, then you simply, begin to see your gain, begin to watch your gain, increase. But let's say after the setup and when you place your trade and there's something extraordinary happen, instead of the candles going down and they begin to drift towards the upside, and then somehow breaking out of the region where your stop loss is supposed to be, what you do is simply close your trade and know that today is an exceptional case. But as when you place your trade and then it's moving well, and then we simply watch your trade, go down, and then you pick your gains. The next candlestick pattern we are going to look at is what I called one white soldier. One white soldier is actually a very bullish phenomenon. It simply means a bullish candle that opened above the close of the previous day bearish candle and then closes above the open of the previous day candle. If you see a series of candles that are actually going down and all of a sudden you see one white soldier, it is a clear indication that the prices have turned, a reversal has taken place. And then again, it should be noted that the best place that it should occur should be at the support level. It has to occur at the right location at the right time for it to be viable. For example, if it occurs at a support or at a moving average support level. For example, this is exactly what I mean here. Assuming the candles has been going down, all of a sudden, this becomes the last candle, a very bearish candle, that what we should expectedly see is another candle to be red. But all of a sudden, there is an emergence of another candle that is a bullish candle, and it actually opened above the close of the previous day candle. There's a gap up, and then it begins to move up, and at the end of the day it closes above the open of the previous day candle. This will clearly indicate to you that it is actually one white soldier that you are dealing with, and it is a very bullish phenomenon. So it is a clear indication that the reversal has actually taken place, and your next trade, you should be a buy trade. You should be get ready to trade a buy trade. You should be going long at the emergence of the one white soldier. So whenever you see it, it shows that the big players are stepping into the market. Who are the big players? The big players such as big institutions like banks, the money managers and hedge funds. It shows you that these people are already in the market and their direction is towards in support of the bulls. For example, let's see that these candles were actually going down like this. They were just going down, continue to go down. All of a sudden, you see an exhaustion candle. Then you see another candle. Instead of a follow-up to the downside, you see another candle open somewhere here, and begins to trade towards the upside and trading above the last candle there. So let's say open here and then closing here. So this is a very bullish indication. And then what you should note is that a reversal has occurred. Then next thing you should see is a boom. Everything will move to the upside. So when you notice it, there should be no waste of time. There should be no gainsaying. There should be no pambinambing about. Simply enter your trade. Simply place a long trade, and then watch your gain improve. So what trading involves is ability to identify key opportunities in the market. If you are able to identify a good number of them, then you are a better trader. Therefore, what trading entails is waiting until you identify a trade that you have a name for. It is better for you to place trade on what you should have a name for. Trade what you know, not what you think. Many people are simply gambling in the market. When they see any movement, they follow that direction. They see another movement, they follow that direction. That is not what it's supposed to be. You should have a name for what you trade, and you should trade what you know. When you identify a setup that you know, trade it without fear, and that's how you're going to be a better trader. All right. Let's see one wise soldier in a chart. Look at this chart. Take note of this chart very well. This is one wise soldier. You can see that these candles were going down, and when it reaches this trend line, this long trend line that I've drawn here, when it reaches this trend line, all of a sudden there is emergence of a red card followed by another green candle, and this is one wise soldier opening above the close of this red candle, trading above, and actually ending above the opening of the red candle. So it's a clear indication that it is a bullish reversal, and it is one wise soldier pattern. So one white soldier pattern shows that it's a bullish reversal, and we are about to see movement towards the upside. So at this point in time, you should be getting ready to place your trade. Anytime you begin to notice any movement above the one white soldier pattern, then you should be making your gain if you trade this pattern. So be confident anytime one white soldier pattern appear, trade it. It is definitely a game you can play anytime, any day, and you will be sure that you're going to be successful. It has more than 95% success rate. In fact, to put it better, the success rate of this pattern is above 98%. That means more than 9 times out of 10. 9 out of 10 times you will get it correct. So what does that mean? The success rate is absolutely very high. So this is one wise soldier here in action, and you saw how it ended. So it occurred at a trend line and at a supported area. So anytime you see one wise soldier at a support, you should be able to trade. So what I will advise is, as a young trader, whenever you enter a market, don't chase around the market. Just wait patiently, and you see your trade comes to you. When you identify any of these setup that I've been showing you, any of the setup that you know very well, just trade it massively and then hit your gain. Once you hit your gain, you get out of the market and then position yourself for another day. Or if the trade is sufficient for you, you can even close your day for that day and then go and enjoy a picnic. Go and enjoy yourself outside. So trade what you know, not what you think. Be able to have a name for whichever trade you place. And as you continue to do that, you watch your trading improve tremendously. All right. The next candlestick pattern we are going to look at is one black crow. One black crow is the opposite of one white soldier, and it is a very bearish phenomenon. Whenever you see one black crow anywhere, just know that it's a bullish turnover. A bullish movement is about to start. So one one black crow, by way of definition, simply means a bearish candle that opens below the close of the previous day candle, and actually it closed at the end of the day below the open of the previous day candle. So we call it a one black crow. It's a very, very bearish phenomenon, a very bearish strategy to trade anytime, any day. Like what you see here, it has opened, the second candle in the makeup has opened and traded all the way down, at the end of the day closing below the open of the previous day bullish candle. So that is what we call one black crow. So anytime you see a candle that opens below the close of the previous day candle and then traded and closed below the open of the previous day candle, just notice that this is definitely one black crow, and it's a bearish reversal pattern. And this type of bearish reversal pattern is worth taking. So this is some of the setup you should be able to trade anytime, any day, because when you know enough of this type of setup, just know that your game has started. Just know that your game has improved. So when you see this candle before, we would have expected that the next candle would have gone up and continued upside, but all of a sudden, instead of going up, you see the next candle is red and it begins to go down, trading below the open of the previous day candle. If you're an aggressive candle at this point, once you break this line, the open of the previous day candle, you enter heavily with all your might. And then if you are not an aggressive player, a conservative trader, you could wait until the candle actually ends fully. Once you notice that it has ended fully and it is below the open of the previous day bullish candle, then that is your trade. A reversal has taken place. It is not that a reversal is about to take place there, but a reversal itself has taken place, and then you should be able to place your sell trade, go short immediately. Let me use another example on a chart to emphasize it. You can see here, from what we have here, those two candles are the up. These two candles here is what we call the one black crow. And notice that a candle has been going up, moving up, moving up. All of a sudden, what happened? You see one black crow. So when you see one black crow, what are you supposed to do? There should be no confusion about it. You know that what you simply need to do is to begin to place your sell trade immediately. You don't need to wait. So let's assume that there's a movement now to the upside, and then one black crow appears. There shouldn't be any confusion when you see these two candles this way. Maybe after the last green candle, a red candle opens and then begin to trade downwards at the point where it is breaking the open of the previous day candle. Then if you're an aggressive player, you simply place your trade, or if you're a conservative player, you wait until it closes here, this place. Once it closes here, the second candle closes here, immediately place your trade, your sell trade, and then you'll be able to make your gain instantly. You see? So that is what you are expected to do. If you are using a stop loss, you could place your stop loss anywhere at the top of this candle, this red candle. Or if you are a more conservative player, you could even place it at the top of the two setup together, at the top of the two setup, at the very top. But if you are a conservative player, simply place it here. If you are a bit aggressive, just place it on that very red candle, and then watch your gain begin to swell up immediately you place the trade. So like this example, there was no attempt at all for the candle to, make any up move anymore after the appearance of the one black row. From the appearance of the one black row, it was movement all the way to the downside without any attempt to make any form of, turn to the upside. So it is a setup that you can trade anytime, any day, and you expect your trade to be successful. The success rate is very, very high, as I've shown you before. So it's a setup that you cannot afford to miss any time that you see it in the market. So be on the lookout for it, and then trade it with confidence, and you will make your gain. The next candlestick pattern we are going to look at is the morning star. Morning star is actually very bullish in nature. It is a bullish strategy. Whenever you see it at a support level, just know that a bullish reversal is about to take place. The first candle is a bearish candle, and the second candle is a doji, and the third candle is a full bullish candle. So it is composed of 3 candles: the red candle, the small doji candle, and then the third green candle. So once the third candle begins to trade above the body, the 50% of the body of the red candle, just know that it is a morning star. All right. Sometimes it can trade above 100% of the first red candle. So if that happens, it's even better. But what it needs to qualify as a morning star is just that third candle trading above the 50% of the body of the red candle. That is half of the body of the red candle. Once it covers up to half of the red candle, then it is a morning star. So one thing you need to know is that it composed of 3 candles. There must be a small candle in between, and then another green candle that will be able to end above 50% of the body of the red candle. Then it is a morning star. It is one of the ways that you use to know when their market is about to reverse. When big institutions have entered the market, you begin to notice candles that were initially going down will begin to form this setup, and this setup is what we call the morning star. It is a very powerful bullish reversal pattern that you can be able to trade anytime, any day. Just know how to recognize them. 3 candles composed of 1 red candle, 1 doji candle, and 1 green candle that is able to close above the 50% of the body of the first candle. So that is a morning star for you, and then get used to it and be able to trade it anytime, any day, so that you make your gain at ease. So, but one question you should ask yourself is, where are you expected to trade this pattern? So if it occurs at a support level or at a moving average support, anywhere around a support area, it is a very beautiful place to trade it. So assuming you are dealing with the case of a downtrend, and there's a movement downwards, and it occurs at where you could consider as the bottom of that trend, and you see this setup, it is a very beautiful trade to trade towards the upside. So just notice any of the indicators you are using, such as the stochastic or the RSI. They are definitely going to show you that they are oversold at that stage. And once the RSI or stochastic is oversold and you see this pattern, just immediately begins to place your trade towards the upside, and you could win. Let me show you how the 3 candles will appear. So you see the first being a red candle, opening and going down, and then ending as a full red candle at a supported area, as a support area. The next candle appears as a doji. And that doji means that the candle doesn't know where to go. It's undecided. It's a sort of indecision, not knowing whether to go up or to go down. All of a sudden, the decision has been made, and you see the next candle, the 3rd candle, opening above the doji. Opening above this indecision candle here with a little gap up, and begins to trade up. And then at the point where it crosses the 50% of the body of the red candle, that is the time you should know that you are dealing with a case of a morning star, and it's definitely a bullish reversal, and it's a time for you to begin to place your trade towards the upside, and then you should be able to win. This has about 95% success rate. So whenever you see it, trade it with confidence. Let's see this one again. So this is another morning star. This candle has been going all the way down, and then all of a sudden there's an appearance of a morning star here. So let's say it's going down in this pattern, just going down, and a red candle forms, a long red candle that closes very red. So what you should have expected is that another red candle could form and continue to move downwards. But instead of that happening, there is appearance of a cross there, or a doji, an indecision candle, very small candle that looks like a cross. It shows that the bears are not able to push down any longer, and then the bulls are not even able to take it up or to push up. So it ended as an indecision candle. So, but what the striking factor is on the 3rd candle. So now you are about to wait for the 3rd candle at the formation of the 3rd candle, and begins to trade above the 50% of the body of the first red candle. That is what will confirm to you that this is a morning star, and then a morning star indicates that it is a bullish reversal, and it is time for you to trade towards the upside. It's a time for you to place your buy, and if you had placed buy and then probably drop your stop loss anywhere below the bottom of the setup, the rest will be history, and you could watch your gain pile up for you. So if trading one trade setup is all you need for the day. So if you have traded this pattern for a day with a sizable lot size, it could be all you need for even that week as a whole. So what you need to know is to become proficient at identifying these patterns in the market and trade it consistently, and that is all you need to become a better player. All right. The next candlestick pattern we are going to discuss is the evening star. Evening star is actually a very bearish setup. When you see an evening star, just know that the time to go short has come. The time to sell has come. It is composed actually of 3 candles. One bullish candle, followed by a doji candle or an indecision candle, then followed by another bearish candle that make up the 3rd candle. So when you group them together, we call it the evening star. You can see the 3rd candle, the bearish candle that begins to trade and then closing above anywhere, in this case rather below the 50% of that first candle. Then you know it is an evening star. It is a setup that is used to go short. So that is one thing you need to know. The opposite of morning star is evening star. So when you see an evening star, know that it is the opposite of morning star. An evening star, it is used to go short. So when you see an evening star, what should come to your mind is a shorting. So when you see the first candle being a green candle followed by a doji, and followed by another third candle, followed by another third candle that is able to take out more than 50% of the body of the first candle, then you are dealing with an evening star. So we are, any moment from now, we are going to look at some examples so that you'll be able to have a better feel of it and to be able to properly identify it when you see it. So when you see this setup around a resistant area or around a resistance of a moving average resistance, therefore it is time to go short. So let's see this setup. This one is coming from a very real chart. So when you see it appear in this way around a resistant area, just know what is expected of you. So this is a real chart. You see this chart and you see these candles. There has been a movement all the way to the upside. The candles have been going up and up. All of a sudden, there is a candle which I can call the exhaustion candle, and it is one of the candles in the setup. So it is an evening star that you are about to see now. The first candle being a very strong bullish candle, followed by another candle which is a doji. This is a doji here. It looked like a cross, so with a small body, followed by the third candle, a very bearish candle that is able to close above the 50% of the body of the first candle. Then we know that it is an evening star that you are dealing with, and it's a trade setup that is worth taking. As you can see from this chart here, the third candle, the bearish candle, has taken out more than 50% of the body of the first candle. So from there you should know that it is an evening star, and you should be going short anywhere around that region. So when you see the appearance of an evening star, just bear it in mind that it is time to go short. So let's assume the next candle open here as a small candle. You see another candle open here again, this red candle. Let's assume that it begins to trade above this line. Once it begins to trade anywhere below this line, then you are supposed to enter your trade, and the rest will be history. And as it gets to this point, by this time your profit must have swelled up, and you could be able to take your first target, which I will call the P1. And as it continues to go down again, probably you will take another profit, which I will call the P2, target 2. So I'm mentioning it at least for those that knows how to take their profit strategically. Sometimes you take your first profit and you allow the rest to run. So that is what I'm aiming at. I'm looking at a situation where you did not take all your profit at once. So you take your first profit once there's a considerable movement down, and then the second profit when there's another movement downwards and a pause. So at this point in time, maybe you should have been considering taking your final profit. But when you notice another candle, which I can call the exhaustion candle, they form and they move all the way down, becoming too elongated than usual. At this point in time, you could have taken your last profit. And when you check all your profit together, this could be thousands of dollars that is in your pocket at this moment in time. So you can say this last profit target, we call it the peak trade, maybe your third profit taking. So but that is not what's important. What's important is not even taking profit, but being able to identify that setup and then being able to be convinced that that is the setup and that you are expected to trade it. That is the main thing. So once you begin to identify these setups properly, then and gain mastery over it, then you know that you have become a better trader. So I'm thinking that you should be able to to give you more examples so that you'll be able to identify all of this setup. So let's so now And we should look at other examples so that you'll be able to identify it when you see it. So this is this one. Right. So let's look at this one properly. I want you to be able to identify an evening star anywhere you see them in the market. While trading, anywhere it appears, no matter the form it takes, you should be able to identify it. As I have said before, it composed of 3 candles, one green candle followed by another doji candle, maybe a small candle at the center. That small candle, sometimes it can just be as it appeared now. So even if it appeared this way, it's still a evening star. So it is one green candle followed by another candle at the center, and this one now it has no body. But if you look at this center candle very well, you know that this is a topping tail bar, or you call it a bearish pin bar. So when you see it, it is actually indication of going short. So it's an opportunity for you to go short at the appearance of that bearish pin bar. But let's say you are still not convinced. The combination of these 3 candles together will make an evening star, and that is more than confirmation for you to go short. All right. So now the point where you should have been more convinced now is when the 3rd candle appears. So this 3rd candle is a bearish candle, and it is what confirms to you that it is an evening star. And when you combine the 3 candles together, there is no doubt that you should take this trade. If you don't take this trade, it means that you really have not understood candlestick. So now my aim is to just make sure that you understand candlestick, and then be confident to trade it anytime, any day when you see it in the market. So this candle now, the center is a bearish pin bar followed by another red candle. Once you see it like that, there is no time to wait. At the point the 3rd candle appears and begins to turn red, this is when you should have dived into the market with all your might, with all your strength. You should be able to load your short trade immediately. And then at the appearance of that red candle, it has been all the way movement to the downside, and that could have been a massive gain for you if you have traded it with confidence. And if you have done so with a big lot size, it could be thousands and thousands of dollars, if not millions of dollars. The next candlestick pattern we are going to discuss is bullish engulfing candle. Look at it here on the left, bullish engulfing candle. When we finish discussing that one, we'll talk about the bearish engulfing. So this is a 2 pattern we are going to discuss concurrently. So starting with the first one, it is the bullish engulfing. So discussing the bullish engulfing, it is composed of 2 candles, one red candle and one green candle. So this first red candle opens and begins to trade, and it is trade following a downward movement. At a point, then the green candle opens and begins to trade above the red candle, and the green candle completely engulfs the red candle. It completely swallowed up the red candle. It is at that point that you call it a bullish engulfing, for its ability to engulf the first red candle in the setup. So that is what makes it powerful. That means it opens and traded completely above the red candle. So it normally signals the arrival of big players. When you see this setup at a support area, or when a chart has been oversold, then just know it is time for you to immediately go long. It is time for you to begin to buy. So most of the time you will see this setup occurring at the bottom of a chart or at a support area. So when you see it at a support area, it is time for you to begin to buy. It is time for you to go long. So therefore, bullish engulfing candle is a very powerful strategy for you to enter the market. It is a very powerful strategy for you to buy. So whenever you identify a bullish engulfing, do not hesitate, do not be afraid. Simply place your buy more than 98% of the time, you are going to be correct. So it is a very powerful phenomenon, a powerful bullish phenomenon to buy. So its appearance signals buy and buy and buy and nothing else. Let's see it in a real chart. Look at this chart properly. Let me bring it closer so that you can see it. So can you identify a bullish engulfing on this chart? I want to allow you to look carefully to see whether you'll be able to identify it. Okay, look at it exactly here where my cursor is. You look at it here. This is the first bullish engulfing. One could have just entered at the appearance of that engulfing candle here. This big candle that is trading above the whole of these small candles here. So you could have entered here, and because it's a complete example of a bearish, a bullish engulfing. Secondly, this is another one here. This is another bullish engulfing. You should know this one very, very well. This one shouldn't confuse you at all. This one completely engulfs the last red candle there. Look at the last red candle there on top of a moving average. So the second candle in the setup is the green candle, long green candle, which completely engulfs the last bearish candle. And in this case, it engulfs more than 4 or 5 of the red candles. Therefore, there's no denying the fact that this one is a very mammoth bullish engulfing candle. There's no professional trader will hesitate at this one. One, because it is being confirmed by a moving average support and is trading above 3 moving average at this moment. Therefore, you should immediately have placed your buy trade and then go long immediately, and the rest would have been history. Look at how many candles it was able to take out. More than 4 or 5 candles at the same time. That shows you the power of this candle, the power of this bullish engulfing candle. It is an unmistakable movement by the bullish engulfing candle, and then it shows you that the momentum is on the bull side, and they are the one in control of the market at this time, and is being supported by moving averages. Now let's look at more examples. Look at this case. I hope in this one you should be able to identify it properly. Look at the red candle, the last red candle, and assuming that this place is a support area, look at what the red candle did. Instead of another red candle to form to go down, it was a green candle that forms and completely engulfs the red candle. And then from that moment, it begins to go up. So this is the place you could have placed your trade here. And if you have done so, and the appearance of this setup, the rest could have been history, because you could have been a massive gain. Let's look more at other examples. Let's look at this one. Will you be able to identify a bullish engulfing setup here? Look at it at the bottom, and it calls in a place which we normally would have called a double bottom. So look at it. When you look at the left, at the previous area, you discover that it's a support there. So as the red candle formed, the last red candle formed and traded an end, another green candle formed. Instead of the candle to be red and continue to go down, it becomes it turns green and begins to trade above the red candle. At that moment, you should have gone long. You should have just bought, and it could be in thousands of profit. So it's a very powerful signal, very powerful strategy to beat the market anytime, any day. Anytime you see this setup at a support level, it is time to buy. It is time to go long immediately, and the rest could be history for you. If you master it, there's no doubt that you begin to trade like the professionals. So once you place your trade here, a buy trade at the bottom of this chart, then you begin to watch your profit skyrocket. The next candlestick pattern we are going to consider is the bearish engulfing. Bearish engulfing is actually the opposite of the bullish engulfing pattern. So when you see a bearish engulfing, it indicates that it is time for you to go short. It is time for you to go selling in the market. So bearish engulfing is composed of two candles, one green candle and another red candle that completely engulfs the green candle. So that is what we mean by bearish engulfing. So bearish engulfing is a very powerful pattern for you to sell in the market. It is a very powerful pattern that is made up of two candles, one green candle and one red candle that completely swallowed up the green candle. So that is what we mean by bearish engulfing. Whenever a two setup forms like this, especially at the resistant area, and the red candle completely swallow the green candle, it completely trades below the green candle, it is time for you to go short. It is time for you to sell. So as you can see from this example, you see the two candles set up. You will notice that the red candle is actually longer than the green candle. It's an indication that it completely engulfs the green candle, and it is a signal for you to be able to go short and sell at that point in time. Now we continue to look in order to identify more examples. Look at this chart that you are seeing here. Look at this chart. The candle were moving all the way to the upside. It continues to move all the way to the upside, and at a time, what do you notice is that there is a formation of a bearish engulfing. This is the last green candle that formed there, and this is a red candle that actually overtakes it and completely engulfs it, completely swallowed up the green candle. At this time, the red candle not only take the immediate green candle, it take out more than 3 of green candles, overdoing the effort of 3 to 4 green candle. What does that connote? It shows strength. It is a show of strength that the bears are now in the market, and they are in the market for real at this point now. If you are an aggressive player, you should have immediately placed your trade at this line that I just drew. Once you notice, and this is what could have become of that trade at that point in time. You could have profited greatly. So what you do as a player and as a trader that knows what he's doing is that anytime there is an appearance of a bearish engulfing, you immediately take it without fear and without hesitation. Assuming you have taken that trade, it's a trade that could have given you thousands of dollars depending on your lot size. So we are still going to look at more examples to be able to be sure that you'll be able to identify it anytime, any day, because my goal is to ensure that you'll be able to identify it when you are live in the market anytime. Look at it here again. This is candles that have been moving all the way to the upside, and all of it, a sudden, they appear a bearish engulfing, which is composed of a one small green candle that is immediately swallowed up by a big red candle, and that is the bearish engulfing. Let's assume that this place is a resistant area, and probably you are using a stochastic or an RSI. The RSI at that time will be showing you that it is overbought, and if you are using a moving average, the moving average will be floating on top of the area, on top of the setup, serving as an additional proof to you, as an additional resistance to you, that your next trade is supposed to be a sell. Your next trade is supposed to be simply shorting. So if you had gone short, you could have been a massive profit, and it is a very powerful setup for you to trade anytime, any day. It's a setup that you can use to go short anytime, any day. You can never underestimate this strategy or this candlestick pattern. It's a very powerful candlestick pattern that is often used by the banks. In fact, its appearance indicates the emergence of big players in the market. imagine here, what do we have here? Let me know whether you'll be able to identify it. This what we have here now, it is a bullish engulfing. So I hope you have not forgotten. And at the top side here now, what happened at this, at the top here, this is a bearish engulfing occurring, and which is used to go short. So this bullish engulfing here, this side here, is a bullish engulfing, and it is used to buy. And then the top here is a bearish engulfing, which is used to short. So here you sell, and then you watch your gain, pile up as the prices begins to go down, as the candles begin to go down, you watch your profits overflow. And then at the left high, yeah, I'm emphasizing both of them at the same time, so that because what happened is that at the left here was a bullish engulfing, and at the left here at the top, very top, is a bearish engulfing. So here was a buy, and here is a sell. Here was a sell. So almost in the same chart, the same day, you could have bought the same day. You could have made profit here going up, and you could have also made a profit going down. If you look at this chart very well, there are still other setup you could have identified. This is another bearish engulfing, and there is no gainsaying about, there's no mistake about. If you know how to identify, you will know that this is exactly a bearish engulfing, and you could have made a profit if you have traded that one and all the way to the downside. And at this point in time, you could have also entered the second one, which is a bullish engulfing to the upside. So anytime, any day, just be able to identify bullish engulfing in the market, and I'll be able to identify bearish engulfing. And once you become proficient at identifying them, then you watch your game improve. Then that means that you have become a professional. So this is another example that we're going to see now. So let's see whether you'll be able to identify. Let me practically show it to you and see whether you'll be able to identify where the opportunities are. Look at this one now. This is a bearish engulfing now, close to that trend line. Assuming you entered there, you watch it all the way going to the downside. This is the second area where you could have entered another bearish engulfing. You could have entered there also, and this is the last one. You could have also entered there. All these places I'm pointing is places you could have entered, and then you would have made your gain. So bearish engulfing is not too hard to identify once you master how it looks. Anywhere it occurs, you should be able to identify. Look at this one now, a bearish engulfing too. Look at the whole of this trend line. There are a lot of bearish engulfing, and each of them was a clear signal for you to go short, for you to sell. So when you draw a trend line and you discover that trend line is well respected, just watch out for all of these signals I'm showing you. Like in this place now, you see the movement very smooth all the way to the downside. So anywhere you could have entered there, and then your trade would have been successful. So get used to entering bearish engulfing and also bullish engulfing, and watch your trading improve tremendously. All right. Next candlestick pattern we are going to discuss is 3 white soldiers. 3 white soldiers. 3 white soldiers and 3 black cross. That is the last candlestick pattern we're going to discuss. But we are going to start with 3 white soldiers. So 3 white soldiers is composed of 3 green candles. 3 bullish candles is what we call the 3 white soldiers. We see them as 3 wise men. So these 3 wise soldiers is actually 3 strong, bullish candles that are called, concurrently following each other. So we call it 3 wise soldiers. So you see the first candle, starting strong and closing strong, followed by another strong candle that started strong and closed strong, and another third candle, which is the last candle in the setup, started strong and closing strong. So that is why we call it the three white soldiers. So the first candle opens and closes strong, followed by the second candle that opened and then closing above it in a strong way. If you are a doubting Thomas, you should have been entering your trade knowing that the game has changed and it is time for the bulls to take over the market. But if you are still doubting and you are not yet sure, another candle opens and then closing above the second candle. Now, this time around, you should have been convinced beyond every reasonable doubt that a reversal has taken place and the bulls are in control of the market. So these three candles is a game of the bulls. It's an indication of the arrival of the big boys in the market. It's an indication that the bulls are totally devastating and they are totally in control of the market. So when you see these three white soldiers, just know that you are about to witness a series of bullish candles that will continue to go up and up and up. All right, so that shows you that the bulls are actually in total array. They are in total devastating mood. Their momentum is so high that any attempt of the bears to come across them, they will simply smash the bears and continue to move up. So as a trader, what you do is you simply join the moving train, and the moving train now is the bulls. So you stand on the side of the bulls. Now we're gonna look at other more chart examples so that you will see exactly what we mean. Look at this chart very well. You will notice the three white soldiers at the bottom of this chart. So it occurs at the bottom of this chart. So that reminds me, three white soldiers often occur at the bottom, and that is the right place for them to occur. Whenever you see them at a support area, you see the first candle followed by the second candle. At the end of the three candles, that you know that it is three white soldiers, and then it's an indication that you have to go long, you have to buy. So assuming you place your trade here, imagine what could have become of it, and the rest is history. It shows that you could have made a massive gain. Probably you could have placed your stop loss here below the three white soldiers, and that could have been boom, massive gain all the way to the upside. All right, so whenever you see three white soldiers, it's time to buy, and you should buy heavily without any fear of failure. Don't fear, no need to fear, only trade with confidence and trade what you know. And what you know here is that this is three white soldiers, and whenever you see the emergence of three white soldiers, it indicates that the bulls are in total control of the market, and the market is definitely gonna go up anytime soon. Therefore, you place your trade without delay. You see this setup here at the bottom of the chart at the support area probably, so you know that it is three white soldiers. So what you notice that as it forms here, look at it very well. Any other candle that opens and begin to trade above this setup, you should immediately place a buy trade, place a long trade, go long immediately, and the rest will be history for you, and you would have made all of this gain. And then this could have given you $1,000 or $2,000 or $5,000, $10,000, depending on the lot size that you use. Someone else could have made even $1 million in this setup, but that is not what matters. What matters is being able to identify that it is three white soldiers and being able to trade it with confidence, knowing that what is a game of chance, and the chance of success in this one is above 95%. All right, so now let's emphasize the two setup again. On my left here, I have the three white soldiers, which is used to go long, and then the opposite is three black rows. So we have talked about the three white soldiers. Now let's talk about the three black rows. So you see both of them are alike. So as we are talking about the three white soldiers, it should be noted that it is used to buy, it is used to enter the market and go long, and then three black rows is the opposite of it, exact opposite of the three white soldiers. So which is used to go short, which is used to go selling, to sell in the market. So 3 black crows actually reverses the action of the bulls, and is supposed to occur at the resistance area, so to be a direct opposite of the 3 white soldiers. So assuming the candle has been moving up and all of a sudden you see 3 black crows, what does it indicate? It indicates that a reversal has taken place. And in this case, it is a bearish reversal. So 3 black crow being the opposite of the 3 white soldiers is used to sell. It is a bearish reversal. And whenever you see it, begin to get your acts together to place a sell. Then as soon as the 3 black crows forms, then the next candle beginning to trade below the formation, simply place a sell, and then you will be in heavy gain. So that is what we are expected to do. All right, so that is it. 3 black crows. So therefore 3 black crows is the last candlestick pattern we are discussing today. Note it. So if you have mastered all the candlestick that we have discovered, that we have discussed so far, this 3 black crows is going to crown it all. It is the last we are discussing today, and 3 black crows is definitely for selling. Whenever you come across it, it is time for you to sell, and then it is a strategy that can give you enough dollars anytime, any day. If you master it, you are definitely gonna have some edge in the market. So 3 black crows is something that you need to make effort to master, so that whenever you are trading and you come across it, you don't need to be confused. It is a strategy that can earn you your living anytime, any day. So you can use it, all the strategy we have been discussing so far. You can use it to trade stock, you can use it to trade forex, you can use it to trade futures, anything that moves in a chart. You can use all of these strategies to trade them. It doesn't matter what it is called, so far it moves in a chart. Use this candlestick pattern that we have been analyzing to trade it. So now we are gonna look at more example of 3 black crows, so that you'll be able to know it and then master it. Take note of the chart, this chart very well. You will discover there's a 3 red candles that is sandwiched at that top there. This place is actually in form of a resistant area. When these 3 black crows occurs at a resistant area, especially if we have an overall trend to be a downtrend, any pause and retracement towards the upside, and you notice these 3 black crows, man, it is time for you to go heavy in the market. It's time for you to place your sell trade and then pile it up, so that any move towards the downside, you discover that your gains and profits are piling up heavily. All right, so whenever you notice 3 black crows, just know that the next move is gonna be towards the downside. And then if you get used to it, it is a game that is gonna profit you anytime, any day. So I want you to take note of all the places occurring. It often occurs around a resistant area, and it is a game you can play anytime, any day, and you expect to be successful. So it's made up of 3 candles, as you can see from the top there. After that 3 candles, it is time for you to go short any other candle that forms and begins to trade towards the downside. Make sure you immediately go short, and the rest will be history. So assuming that you place your trade at the emergence of the 3 black crow, look, imagine what could have become. Look at this one. Imagine this one. 1, 2, 3. So these 3 candles that you see here is also an example of a 3 black crow, and it is a strategy for you to go short. It is a strategy that you can use to sell in the market and position yourself alongside with the big players, because this occurrence indicates that the market has changed, and often it is as a result of institutional players arriving in the market. That is why it will, that is why it normally comes with a high level momentum when it occurs. So if you have found value in our tutorial, I want you to give us a thumbs up and then subscribe as a way of showing us support, as a way of showing that indeed, you are encouraging us in what we are doing, and we are going to provide you with excellent tutorials that will fire up your trading. All right.